Now let's turn to inflation. And at 7 o'clock this morning, the Office for National Statistics released the latest data for December. And the rate of inflation has risen for the first time in nearly a year, up from 3.9% in November to 4% in December. Joining me now to discuss this, should we be worried, is Vicky Pryce, Chief Economic Advisor at the Economic and Business Research Centre. Thank you very much indeed for joining us. Good morning to you.
Morning.
We understand from the ONS the reason why it went up instead of down, as many had predicted, was because tobacco and booze both went up in price thanks to government duties, which makes it very strange that the experts didn't predict that it would go up as a result. Should we be worried?
Not really. I mean, there is a reason for that increase, as you rightly say. There was a 4% increase in the tobacco prices as a result of the announcement during the autumn statement that tobacco duties were going to be going up. So the cost of buying tobacco has now gone up by 16% year on year. So if this is a self-inflicted increase in the inflation rate, so certainly we shouldn't be worried. But we are going to see a little bit more of that because, of course, in January, when those figures come out next month, we're going to see that this month will have an uptake as well, quite possibly, because of course we've had the upward revision of what the electricity price cap is going to be. So we're going to be paying 5% more for electricity as a result of what the government has decided to do with this. So the regulator has upped the allowed price that can be charged to us. So we're going to see that as well. But this is just a temporary factor. What we're going to see after that is that quite a lot of what has been going on over the last year, which is basically a decline in energy prices and in food prices internationally, is going to be reflected in our own CPI as well, consumer price inflation. And there are still people who are predicting that inflation will be below target, in other words, below 2%. Towards the middle of this year, which will be quite interesting because, of course, the Bank of England is going to have to make decisions on what to do with interest rates.
Well, I was just going to ask you about the interest rates, but just going back quickly. So, the electricity cap going up and all the other things that will have that it's going to get a little bit worse again. But there's nothing nothing to be worried about. The underlying trend in terms of prices we are facing is still going in the right direction and could well actually. I mean, when was the last time the Bank of England actually hit their target? I mean, goodness me, it's been a very long time. In terms of interest rates, in terms of what the Bank of England is going to do, they got a lot of criticism for acting too late and then acting too long. They didn't raise interest rates where they should have, and then they raised them too high. And wow, that has really hurt an awful lot of families who have been lucky enough to buy their own home, but also coming off those fixed rate mortgages or on a variable mortgage. So that's what I was on, facing those mortgage hikes, thousands of pounds extra a year being expected to be paid. Do you think they have got the message now at the Bank of England and those interest rates hikes are done and dusted?
I think you're absolutely right. I mean, the concern about the reputation of the central banks more generally, and it's not just the Bank of England, it's the same thing happened with the Federal Reserve Bank in the States and also what's going on in Europe, is that there's been the general accusation they acted a little bit late. But actually, I think what they were worried about before was that they might kill any serious recovery that was beginning to take place post-COVID by raising interest rates. And this is exactly what's going on. I mean, the world is flatlining right now. The UK is flatlining. You've seen what's been going on with the latest GDP data. So it doesn't really matter what happens in the odd month in terms of inflation. I think what we now need to worry about is what's going to happen to the economy more generally. And you're quite right to mention the very substantial cost that people are now having to bear, not just taxes, which have gone up, of course. Anything that's happened on the national insurance contributions reduction just offsets the extra tax that one pays because personal allowances are frozen. So there is all that. But there are just some little worries. And you started this question by asking, what do we need to worry about in the future? Do we not worry about anything else? And therefore inflation rates will come down and therefore interest rates. We have the problems of the Red Sea. There is no doubt that there are concerns about the supply chains there. The general expectation is that unless this continues, the problems we're having now in terms of being able to send goods through the Red Sea and the Suez Canal, perhaps carrying on for a long time, if that were to happen, then obviously this is going to have an impact on inflation, more generally, global inflation, global prices.
And again, it's confidence and it's just the supply issues, the bottlenecks that we've seen, certainly ever since 2020. Yes. But again, I think an awful lot of people also sit there and go, well, what does this mean for my wages? We've seen wage inflation go up and then sort of go down again as things have calmed down. But of course, we are still all left much worse off because most people will not have seen a wage rise covering all of the inflationary rises we've seen in prices, their mortgage, their heating, all that. We all still, most of us are paying off the heating bill from last winter, let alone the one this winter.